Good morning, everyone. Bonjour à tous. Welcome and thank you for joining us today for this webinar on the commercial opportunities for Canadian businesses in the Fintech sector of Singapore. This session is brought to you by the High Commission of Canada in collaboration with Capron Asia. Je m'appelle Olivia Lee, je suis déléguée commerciale au Haut Commissariat du Canada à Singapour et je couvre le domaine du FinTech parmi d'autres. My name is Olivia Lee and I'm a Trade Commissioner at the High Commission of Canada in Singapore covering FinTech among other sectors. As you might know, the webinar is one of the events that I'm organizing in the lead up to the Singapore FinTech Festival, or SFF for short, taking place from November 8 to 12. SFF is going to be going hybrid again this year, with the majority of the show being held in the virtual format. So the High Commission of Singapore is actually leading a virtual delegation to SFF, and you could join us in a few different ways. First of all, what you can do is you can sign up to be included in the Canadian Capabilities booklet. So this booklet is going to be shared with the network of trade commissioners, local contacts in Indonesia, Japan, Korea, Malaysia, Philippines, Singapore, Taiwan, Thailand, and Vietnam. You can find more information via the QR code. It's going to be the same QR code in the next two slides. So if you missed this one, you could just wait for the next one. Then another way for you to join what we're doing during SFF is you can be a co-exhibitor under the virtual Canadian booth during the show. The cost is $2,000 and it will be charged directly from the show organizers. And you'll be entitled to the following points that you can see on your screen. And lastly, if your company provides a direct solution for payments and remittances, alternative financing, or insurtech, you can join our pitching sessions. So you'll have the opportunity to first connect with us trade commissioners during an expert cafe. We will help you to better identify which markets that might be suited best for you before having the opportunity for you to pitch directly to buyers and partners from the TCS networks. And after that, you will get curated B2B opportunities with the buyers/partners that showed interest in you. So feel free to reach out to me if you have any questions. I'll send my contact information in the chat that there is on the Zoom platform. I would like to highlight as well that Ontario will be organizing a mission. It's going to basically what the mission will be about. The few, I guess, highlights would be we'll have a shared exhibition space. You will be entitled to digital passes and you'll get curated B2B meetings. I'll also share the person, Lisa, who is in charge of the Ontario delegation with you in the chat, in the chat. Now, before we dive right in, just a few notes on housekeeping. The webinar is being run in listen-only mode, but we are definitely very keen to have questions. So please do take advantage of the Q&A functionality within the platform and submit any questions that you may have. And we'll try to get through them as many as possible. Also, please note that this will be recorded and it will be shared to all registrants. Working with us on this paper was Zenon Capron, the director of Capron Asia, an Asia-focused financial industry market research and consultancy firm. So over the next 40 minutes or so, Zenon will walk us through the key findings from the report, as well as address any questions that you may have. So without further ado, I would like to hand over to Zenon.
Great, thank you, Olivia, and thank you so much for everybody for coming out either late in your evening here in Singapore or early in your morning in Canada. As Olivia mentioned, over the course of the next 40 minutes, I want to give you an idea of kind of what's happening in the fintech industry in Singapore. For this paper that we did with the High Commission, we narrowed it down to a certain number of segments that really showed potential and opportunity within Singapore's fintech industry. So I want to kind of bring those to life with some ideas around the opportunities, challenges, and the overall view of what the opportunity is for Canadian fintechs in Singapore. Just briefly, before we get started on Capron Asia, we are a market research and consulting firm focused on the financial industry here in Asia. So we cover banking, payments, capital markets, and we work with a number of the large brands, both within the financial industry and ancillary to the financial industry, to help them understand and solve their challenges that they face within Asia. To kick off, it's useful to set some scene setting with the actual situation on the ground in Singapore. Singapore, in many people's minds, is the gateway to the East, certainly for the Southeast of Asia. When we look at Southeast Asia, the fundamentals of Singapore being a relatively stable place politically, economically, and socially makes it very attractive for companies to set up here. Just thinking about when we set up Capronasia in 2016 in Singapore, it took about an hour for the gentleman to leave, put in our details, register the company, and come back, and we were up and running as a business. Similarly, within the financial industry, the surrogate that we have of banks here in Singapore has really lent itself to Singapore really being a financial hub of Southeast Asia, much like Hong Kong serves as a hub for Greater China. Singapore in many ways is the gateway to Southeast Asia, which is increasingly important when we look at the development of the economies around the region. Places like Indonesia, Malaysia, Vietnam, Thailand, many of those end up being the first or second remote offices for companies that come to Asia, especially fintech companies. And that basis of Singapore's financial industry has really kind of set the stage for everything else that what we would call Singapore Inc., including the government, the regulators, and more particularly the Monetary Authority of Singapore, which is the main regulator here in Singapore, have done to enable fintech in Singapore in general. I mean, when we look at the cumulative fintech investment in Southeast Asia on the chart on the right here, we can see that Singapore far outweighs most of the other countries in investment from 2015 to 2019. Now, these numbers may be slightly different in 2020, 2021, because we started to see a lot more traction in places like Indonesia. In fact, fintech investment in Indonesia is quite strong, but often because those reasons that I mentioned before, with Singapore being the hub, much of the investment comes in here. In terms of the diversity and the segments that are covered within Singapore's fintech industry, it's fairly evenly split across the segments that we used for the study. In particular, payments stands out as about a quarter of the fintechs here in Singapore, and we'll understand that a little bit more as we go through it. But the fact that it is a central hub and it does have the financial industry here makes it an obvious place for both domestic and cross-border payments. Of course, things like lending, wealth management, RegTech, and InsurTech all have value here as well. One thing to note about the country is, of course, that the population is relatively small compared to other places. When you look at Indonesia with a population of 300+ million, it's a much larger market. Now, the average per capita income in a place like Indonesia is much less than it is in Singapore. But the market here in Singapore is quite saturated already with both financial services in general. I mean, when we look at the numbers around financial inclusion, 98% of Singapore's population is financially included. So it doesn't suffer from many of the other challenges that a place like the Philippines would suffer from, where financial inclusion is about 70% of the population. So it's a little bit about the dynamics of what's happening in the industry here in Singapore. There are a couple of key trends that I want to go through that are shaping and really defining the fintech industry in Singapore at the moment. First of all, the pandemic accelerated what was already a rapid shift towards digitization. I've been coming to Singapore for over a decade now, and to note the difference, one of the most salient areas where you see this difference is in the food markets. These would be the hawker centers that we would have here in Singapore, where you have many different stalls selling various different cultural foods. 10 years ago, that would have been an all cash business, but increasingly now, especially today in the pandemic, that's turned digital. Whether it be QR codes or NFC payments, we're seeing an increased uptake, even in some of these segments of the market that we wouldn't have expected to see it in. Increasing popularity of alternative lending on the back of job loss and livelihoods. Singapore is not immune to the impact of COVID in terms of the employment within the country. We've seen many companies cut back, and although the government has been there with support for companies and individuals who have been impacted by the pandemic, there have been challenges around there. So the increasing popularity of alternative investments has become even more popular because of the challenges that the pandemic has placed. And so when you have banks that are somewhat risk adverse, having these alternative lending channels is very important for both SMEs and individuals. Increasingly, we're seeing a higher uptake of digital wealth management products. I'm actually Canadian by birth. I grew up in the US, and I'm used to using platforms like E-Trade or Ameritrade that Up until a few years ago, it was $10 or $15 to make a trade, but now it's free to make a trade on these platforms. In Singapore, even today, banks like DBS will charge actually a fixed fee plus a percentage of the trade. So if you're investing $100, you'll pay $3 of that to DBS, which for me, as a North American, I thought that was completely kind of ridiculous. And that market is only starting to change here now, and we're starting to see a lot more of these low-cost platforms, these robo-advisors come into play that are offering Singaporeans a much better return on their money by investing in ETFs that we would see from many of the robo-advisors in other markets as well. So that digital wealth management platform uptake has been really high, especially as people don't have that much money to spend, aren't spending their money on other things, so they have a lot more disposable income. Singaporeans are big travelers here in Southeast Asia, but obviously they haven't been able to travel over the past year and a half, at least very easily. So all of that money that would have gone towards travel is going towards investment and spending here domestically. Digital banking has really taken off in Asia in general, but more in particular in Singapore. Towards the end of last year, 4 digital bank licenses were awarded. 2 that are wholesale digital bank licenses and 2 that are full-scale digital bank licenses here in Singapore. The market here, as I mentioned before, is already 98% covered by the traditional financial institutions, and we have other players like TransferWise and Revolut that are offering very cheap cross-border payments. Still, the entrance of these digital banks, either later this year or early next year, will bring a new level of competition to the market here in Singapore and really will drive existing financial institutions to rethink their value propositions and the cost of the propositions that they're bringing to market. Rapid adoption of technology. All you have to do is take the MRT or take the bus to see everybody on a smartphone here in Singapore. The government in general has really focused on technology. When you think about Singapore, it's a landmass of about 750 square kilometers and has very few natural resources. So it's always had to rely on kind of these knowledge-based industries or service industries to chart its future. And technology in general has been a big part of the government's focus over the past decade, and now more specifically around fintech. This has enabled the adoption of many of the technologies. And indeed, when you look at things like AI and cryptocurrency, many of the large players are here in Singapore. Again, for all of the reasons that we mentioned before around the ability, the ease of doing business here in Singapore, as well as the focus that the government has had on developing technology, which leads to a lot of really qualified individuals here in the market. Push for tech literacy, to support that technology push, having technology literacy built into the curriculum of many of the primary schools here, as well as the graduate and undergraduate schools, has been a key part of the government's focus. And that's really enabled this next generation of individuals to really come into these jobs. It's especially important when you look at Southeast Asia. Many of these technology jobs historically have been exported to Vietnam and other lower cost destinations around the region. Oftentimes the human interaction element, whether it be a call center, is exported to places like the Philippines, whereas Vietnam has a strong programming base. So what the government is trying to do is keep that business and keep that from being outsourced to these other countries and keep that in Singapore. And that's been a big focus on that technology literacy. And then when we look at the push that the MAS has had, the main regulator here in Singapore, is to develop ancillary organizations to really support the development of payments, open banking, and cryptocurrency and digital currencies in general. So we've seen programs like APEX and Project Ubin that have been really focused on research and POCs and development around this that have been very important for the industry as well. And finally, deployment of RegTech and SupTech. The MAS was an early adopter of SupTech solutions, and that's filtered down into the RegTech industry here in Singapore. Many of the RegTech providers in Asia are based here in Singapore, and most of the banks here would have automated regulation processes as required, either by the MAS or just on their own volition of setting it up on their own. Now, when we look at the opportunities for Canadian fintechs in Singapore, we identified 5 different areas. when we kind of look at what's happening in Canada around each of these segments, a lot of this you'll be aware of, obviously, as many of you are coming from the Canadian fintech industry. But there are obviously certain challenges, and we mapped out some of these in more detail in the paper. But around payments, lending, insurtech, RegTech, and wealthtech, which were the 5 segments that we were looking at, there are various challenges in the domestic Canadian market, which may mean that a company with a great technology platform, specifically in the fintech space, if there is a fintech company that is looking for all their alternatives, Singapore could be an interesting opportunity for them. So when we look at the opportunities for Canadian fintechs in Singapore, we, again, breaking down into those 5 spaces, looking first at payments. And we talked about this a little bit before, but really the trend is around digitization. When we look at anything from cross-border payments to P2P payments to retail point of sale payments, it's really gone digital here in Singapore. That was helped by the implementation of a nationwide real-time payments infrastructure here in Singapore called FAST, which basically stands for Fast and Secure Transfers. On top of that, they've layered functionality that gives proxy payments. So the Pay Now functionality incorporates a QR code and also uses a mobile phone number as an identifier. So rather than having to know your bank account number, I can just type in your mobile phone number and transfer directly to your account that's tied into this Pay Now infrastructure. COVID-19, e-commerce, digital payments were very nascent here in Singapore a decade ago, but we're growing very rapidly. But the change over the past year and a half has been incredible. Even for a small market like this, I was ordering e-commerce online earlier tonight on 2 different platforms, and I found it difficult to get a slot before Saturday. And the lockdowns here in Singapore don't prevent us from going to the supermarket. It's just that people are so used to shopping online and planning ahead. The Singaporeans are very kiasu and very planning ahead in many of their activities. And apparently shopping online appears to be one of them now as well. This is also driving the increased popularity of e-wallets and buy now, pay later models. So we've seen a number of players launch in this market, Atome, Hula, that are targeting both the Singaporean market and the overseas market. And so that's something that's starting to develop. Around industry-specific regulator initiatives, there are a couple of things. The FSTI scheme, POC scheme, provides funding for fintechs in this space for innovative solutions. And the MAS really right now is focused on cross-border payment infrastructure. So one of the things that's happening right now, which may seem quite challenging in a travel-restricted environment, but now the QR code systems, the QR code payment systems of Thailand and Singapore are linked. So, if a Thai were to be here in Singapore and wanted to make a payment to a QR code, they would be able to use their native payment app, their native prompt pay app from Thailand. And conversely, if a Singaporean is going overseas, then they have the opportunity to use that as well. One thing to note about the payment industry here in Singapore is, much like I mentioned before around robo-advisors, there is a lot of economic rent being extracted. One of the other things that I was surprised with when I came here to Singapore and I got a Singapore credit card was that the foreign transaction fee was about 3.5%, meaning that when I went to Thailand and I made a transaction using my credit card, I would pay the 1% FX that Visa or MasterCard typically charge, and then 3.5% would go to my credit card issuer. And coming from North America, most of my credit cards have no foreign transaction fee, or if they do, it's 1%, very minimal. So that is something that's different around here, and that drive and the launch of platforms like TransferWise and Revolut has really started to push down on the margins that some of these traditional financial institutions were capturing through cross-border payments. And then these other initiatives like the cross-border QR will further put compressed margins on that. So the opportunities when we look at what's happening around here is really around value-added services, such as spend tracking and offline loyalty programs would be crucial. Really, the payments market, especially domestically, is all about differentiation. So how can these payment companies differentiate their offerings? Something that is not included in the QR code system Pay Now is reconciliation. So if you are a merchant and you want to reconcile your payments at the end of the day or at the end of the week or the end of the month, it becomes very challenging because all you have are these transactions. They don't really link into either a restaurant POS ordering system or another system to support that. Cross-border digital payments and remittances are growing in popularity and have huge traction, but it is a very competitive space as well. Margins are being compressed, so it's turning into a very focused on volume game. The adoption of ISO 20022 standards is expected to open up opportunities in Singapore and ASEAN. Once we have more integration between these real-time payment systems, there will be more opportunities for cross-border payments across that as well. And that will often be using the ISO 20022 standard as we go through this. Moving on to the next segment is lending. I won't go through all of these in detail, but for many of the reasons that I mentioned before, lending is really starting to pick up in Singapore, whether that be for meeting short-term capital needs as a small medium enterprise, or as an individual who may have lost their job. Increasingly, people are looking for alternative lending solutions. So these are really picking up in Singapore. One of the challenges around this, when we look at something especially like buy now, pay later, is that the regulation is not particularly strong around restricting what they can do. So as you will know, buy now, pay later across the globe right now is facing a lot of challenges and a lot of regulatory scrutiny. That is also the case here in Singapore, where buy now, pay later, the government is really looking at what they should be doing around this. In terms of industry-specific regulatory initiatives, a lot of that funding is still there. There's been some temporary bridging loan programs that have been channeled through some of these alternative lending platforms. And we're starting to see a lot more about green finance and sustainable finance in Singapore as well. Singapore is trying to position itself not just as a green finance hub in Asia, but also a green fintech hub in Asia. And so the green initiatives and the platforms like Greenprint, which was recently announced last year at the Fintech Festival last year, have really taken shape and are starting to really drive things forward here, especially in the lending space. In terms of opportunities, the SME market here in Singapore, the SME lending market is still very underdeveloped and very nascent. And so there's many opportunities around that, especially for specialized services, specifically catering to SMEs. Whilst the credit scoring here in Singapore is relatively robust, there still is an opportunity to leverage alternative data to provide services in that space. Singapore is the third largest market in P2P lending, so that's one of the areas that's growing as well. Third largest market in Southeast Asia. Competition from digital banks will really push the incumbents to up their game. And if we take examples from China, where lending is easy as a couple of clicks on an app, really Singapore's traditional providers need to up their game to be able to at least match that, if not exceed that customer experience, will be really important. And the active, green finance, one of the challenges obviously is making that profitable, but there is opportunities for products and services around that, especially in the fintech space and the growth of green fintech in the region. Moving on to InsurTech. One of the challenges here in Singapore is that selling insurance and buying insurance was a very opaque process. It's catered to be, quite honestly, a little bit confusing. It's very difficult to figure out what you're buying. One of the things, I speak as a foreigner that was coming here first, it's very difficult to buy just health insurance. Health insurance is typically tied into a savings account and tied into life insurance, and it's quite a complex product, even for somebody like myself who has experience in the financial industry. So a lot of the focus on InsurTech is on two angles. First of all, clarifying and simplifying the process of buying insurance, whether that be term insurance or short-term insurance or health insurance. And secondly, providing to the underserved segments of the market. So like with gig economy workers, Grab, which is kind of the Uber equivalent of Singapore and was actually bought the Uber business here in Singapore, has driver insurance for its drivers as well as rider insurance. And those are very micro use cases, but those are clearly kind of part of the way that InsurTech is growing in Singapore. Similarly, there are a number of initiatives around this that are really driving the adoption of InsurTech solutions in Singapore and providing funding for that. One thing you'll notice across all 5 of these segments is that there's typically a program or a set of programs that the government has put in place to support fintechs in providing these products and services and developing solutions for the market. In terms of opportunities, there's clearly the data opportunity. There's a lot more focus on using health data, using cameras in cars to understand people's driving habits, using motion sensors to really understand how people are getting around in terms of health insurance. So there's a big focus on using alternative and real-time data to drive a lot of these InsurTech solutions. Again, the gig economy, as I mentioned, those underserved segments of the market are getting a lot of attention from these insurtech providers, especially because if you're providing it something online, you can typically do it much cheaper than you can offline. And so really catering to that at a very low cost is very important. And then serving SMEs as well, cost effectively serving SMEs is very important for the insurtech space. As I mentioned before, RegTech is very important in Singapore. The Monetary Authority of Singapore was one of the first regulators within the region to really push for subtech solutions. And then within the RegTech space, they've mandated now machine readable submissions of many of the reporting that financial institutions need to provide to the central bank. And so we've seen a big focus on that. That's especially important because of the anti-money laundering issues that Singapore has faced. When you look at Singapore being the fact that it is a wealth management center within the region, there's the challenge of ensuring that the money that's here in terms of the source of funds and the actual individuals themselves are not on any sanctions list. It's very challenging. And there's been a lot of challenges over the past couple of years, not just with the IMDB in Malaysia, which is probably one of the most well-known cases of Singaporean banks been involved with money laundering or ill-gotten returns, but there are other challenges around money laundering that banks are facing every day. So there's a lot more focus on that. One of the other things of note is Singapore's Technology Risk Management Guidelines, or TRM guidelines. These are really designed to address the challenges of cyber attacks and put certain requirements both on technology providers and service providers like financial institutions to help them to assess risks within their technology architecture and address those in a way that the government feels comfortable with, the government and regulators feel comfortable with. Again, for the industry-specific regulatory initiatives, there's a few different grants and schemes that are in place to help support the RegTech providers during this time and helping them develop. So when we look at the opportunities for RegTech providers in Singapore, clearly the government wants to go completely digital in terms of its reporting. And so that is driving the adoption of RegTech solutions across Singapore. And then, as we see fintechs develop and the fintech industry develop more in Singapore, there will obviously be more needs on the back of that for RegTech solutions, especially when you're doing things like instantaneous lending and other more complex products and services. And again, this is all supported by the MAS, who's putting many programs in place to support the development of RegTech solutions and RegTech providers in Singapore. Singapore's financial industry largely is driven around wealth management, with the de-emphasis of many of the Caribbean destinations and changes in the bank secrecy laws in places like Singapore. Many of the individuals, the high net worth individuals and ultra high net worth individuals, are parking their money here in Singapore, and that has developed a large segment of the population that is looking for unique solutions and demanding the drive for wealth tech solutions. Now, what we found, though, is on the upper end of things, so with the high net worth individuals and the upper or ultra high net worth individuals, there aren't too many solutions that really play to those players. Those individuals tend to be people who want their own private banker to speak to, somebody in person to have a discussion with, rather than dealing with an app or an interface on a website. And so really, the development of wealth tech has been around that middle income and lower income individuals who may not have had access to a financial advisor and would be looking for particular solutions to invest their money that are lower cost than the other options that are out there. Again, when you look at things like trading capital markets, historically it was very expensive. And now you have players like Stashaway that provide products and services that for less than 50 basis points of fees every year, they provide you, access to ETFs and a variety of different portfolios based on your goals and your risk tolerance in the market. So robo-advisors are expanding very rapidly in Singapore and using Singapore as a basis for other markets in Southeast Asia. So Stashaway is expanding into Hong Kong, and we'll be looking at Malaysia and Indonesia as well. It was one of the first robo-advisors to hit $1 billion in AUM in Southeast Asia, and so growing very rapidly. Another interesting space is the B2B robo-advisor solutions. So there's a company called Bamboo here in Singapore that's focused on providing actually the picks and axes, picks and shovels for providers to provide their own robo-advisory service. So Bamboo will go to a bank like a Standard Chartered and say, look, we'll help you develop a robo-advisor solution. Standard Chartered will slap their logo on it and present it to clients, effectively providing a one-stop technology solution for these banks to launch their own robo-advisors. Bamboo is one of the few players in Southeast Asia, but interestingly, most of their business comes from outside Singapore, both within the region and then other regions around the world. In terms of industry-specific regulator initiatives, there's not too many that are specifically focused on RegTech, but one regulation to note is that in 2018, the MAS relaxed rules for robo-advisors in the market to make it easier for them to provide products and services. In terms of opportunities, there is this confluence of investors looking for more sustainable investment options. So increasingly, we're seeing robo-advisors include ESG or sustainable metrics in their portfolio offerings. So if individuals are interested in more sustainable investments, that is one of the options on some of these robo-advisors as well. And then, the lockdowns, as we mentioned before, people have more disposable income because they're not traveling, they're not going out as much. And so a lot of this is being channeled into investment products and services, and specifically robo-advisors. It is, however, a very competitive industry. And so it is important for any wealth tech that is set up in Singapore to have a clear strategy for the rest of the region. And that's not specifically around RegTech or specifically around wealth tech, but some of the other segments, as we'll see as well. So when we look at the market, although it is a very welcoming market in terms of being able to set up a company here, there are some slight nuances to the market that make it a little bit less welcoming for foreign players to come into the market. Just to give you a couple of examples of how that plays out. One is the ATM machines and the ATM networks, payment networks are not interoperable here in Singapore. Yes, if you come in and you use a Visa card or a MasterCard, you can use any ATM. But if you have a DBS card, it won't necessarily work in an OCBC ATM. What this leads to is oftentimes, for the people that are withdrawing money, you may see a DBS ATM that has 5 or 6 people queued up behind it to withdraw money, but an OCBC ATM right next to it that has nobody waiting. It's just a nuance of the market, and it's kind of an uncompetitive aspect of the market, which is in many other places you have systems on the back end that allow interoperability between the ATM networks. Singapore is not entirely different than other markets in Asia, where a large majority of the retail and commercial banking market is controlled by a small number of institutions. DBS, OCBC, and UOB are the 3 main Singaporean banks, and they control probably 90% of the retail deposits here in Singapore, as well as 90% of most of the banking market. So it becomes very challenging, even for banks like Standard Chartered or Citibank. They tend to cater to international individuals or the high net worth segment, the mass affluent or the high net worth individuals. And so it'd be interesting to see when the digital banks launch the opportunities that faces and how the competitive landscape changes around that. In particular segments, there's also heavy licensing requirements. That's not necessarily a bad thing, because we do want to make sure that financial industry remains stable. But although, as an example, many of the payment companies now are operating on exception, most of them will have to be compliant with the Payment Services Act, the PSA, by 2022, 2023. Singapore also has stringent data protection guidelines, as laid out by the Personal Data Protection Act, that defines how people can use customer data, as well as how it should be stored and secured. So there are not particularly onerous requirements around that, just things you would expect from a privacy-focused and customer data-focused market. And finally is the compliance with the TRM guidelines. For many of the technology companies and institutions that we spoke to for this report, they cited that this added additional cost to their operating expenses and their capital expenses. So that is one challenge that companies face to comply with these guidelines. Now, looking at specific considerations for Canadian fintechs that are either in Singapore or looking to move into Singapore, there are a couple of points that are worth noting. First of all, you should plan on having a physical presence in Singapore. Although Zoom has arguably, and the pandemic has arguably moved many of these things virtual as we're speaking now. Having a physical presence here in Singapore gives a connotation of commitment to the market. And so the fintechs that we've seen really be successful in Singapore are the ones that are actually here. Selling into this market virtually, once you have an established relationship with some of the players, can be done, but a physical presence here is really important for that discussion and for closing business in Singapore. Working in the innovation hub of a bank will not always result in a partnership. When we look back 3 or 4 years as Singapore's fintech industry has grown, we've seen banks like DBS have hackathons, co-innovation spaces, any number of ways of addressing the market. Many fintechs get excited about getting accepted into one of these programs or working with one of the banks, but in our experience, that doesn't always land in a partnership or even a POC. Oftentimes, banks are kind of poking the wheels and trying to get a feel for what's out there and what the options are, and then will go off and develop it itself or go for a larger provider. And so just because a fintech makes it into the innovation lab doesn't always result in a partnership for the market. Budget for a long sales cycle. It would be longer in places like Indonesia and China, but still here in Singapore, you need to establish a presence here in the market and don't expect to make money from day one. This is a process selling into these organizations. There are spoiled for choice in terms of the existing providers that are here. And these existing providers have a head start in terms of being able to sell into these banks for 2 or 3 years already. So if you're thinking about coming to the market and you're a complete upstart, you're starting from scratch on that process. And so that can be challenging and really need to budget for a long sales cycle. Singapore, however, is a great incubator for startups and a gateway to the wider region for all of the reasons that we mentioned before, the fact that it's very easy to set up a company, that it's very easy to hire local talent and relatively cost efficiently. It's a great place to set up a business with the view to expand to the rest of the region. I think you would have to have a very niche solution to be able to rely solely on Singapore as being your sole source of revenue. But certainly when you look into markets like Vietnam, Indonesia, and the Philippines, there is a tremendous revenue opportunity for fintechs in those markets. Again, that it's a relatively small saturated market, as I just mentioned before, you need to have a regional expansion strategy. The other thing, and this may seem obvious, but increasingly, and we often see this from companies that are coming into the region, although Asia is a monolith in terms of geography, it is very different from cultures, nuances between each of the markets. There is really no such thing as a singular Asia strategy. Beyond failure, the successful players are the ones that come up with country level strategies. Although Malaysia is only 30 kilometers away from where I am sitting right now, it's a completely different set of habits for both consumers and the businesses and needs to be treated as a separate market. So if you're looking at Asia, having a nuanced approach to each of the different countries that you're going to or the markets that you're going to is very important, because Singaporeans are not like Indians, are not like Indonesians, are not like Malaysians, and really requires a very unique and tailored approach for every market. One of the things that we identified and was brought up to us is the idea of cheaper cost of capital. One of the challenges here in Singapore is that capital is relatively expensive. The VCs that are coming into the market demand lower valuations and bigger slices of ownership, whereas in Canada, fintechs may have access to cheaper capital in the form of higher valuations and lower equity giveaways. So one of the things that we identified is an opportunity is if companies are raising in Canada, they may be able to raise more cheaply than they could here in Asia. And that could give them a competitive advantage of coming into the market with that cheaper cost of capital. Another consideration is to benchmark against the Singapore FinTech Festival winners. As Olivia mentioned before, the FinTech Festival is coming up and there are many challenges around the FinTech Festival that the government puts in place. This year, there's a big focus around digital currency. And so the winners from the awards from the FinTech festivals are a good benchmark. So if you are saying say are a wealth tech solution provider in Canada and you're looking to come to the market, look who's won the award for best wealth tech over the past couple of years and benchmark yourself against them. That will give you an idea of kind of your strengths and weaknesses in the market and how you should position yourself coming into Singapore and indeed the rest of the region. Finally, look at the FinTech Hackcelerator problem statements. Every year as part of the SFF, the FinTech Hackcelerator happens, and there's a number of problem statements that are published to the market that are publicly available. If you take a look at those, that will give you an idea of some of the problems that FinTechs and companies are facing here in Singapore and where your solutions might be able to fit. So that's really a good starting point. The talent is here, but the market is competitive. We are doing some work with a large technology platform, and it is a very sexy place to work for many tech individuals, but their talent and their programmers are still being poached by Chinese companies that are here. So it is a very competitive market here in Singapore, especially for technology talent around engineers and programmers. It's a very cutthroat business, and you see people hopping around, especially the good developers. So you just need to keep that in mind when you're developing here. You may want to consider development back in Canada or in other markets in Southeast Asia where it's a little bit less competitive and cheaper cost. So just a couple of final thoughts to summarize some of our thinking around this. And obviously we get into a lot more detail in the report itself, which we'll distribute later on. But although it is a relatively small market, Singapore has done a remarkable job of establishing itself as a key center of FinTech in Southeast Asia. For the reasons that I mentioned before, Singapore, without having those natural resources, has to rely on a knowledge economy to develop its industry here. And so it's done a phenomenal job within the technology space and within the FinTech space to be able to do that. The market continues to evolve very rapidly and expected only further cement its positioning as a center of FinTech. The population is not growing particularly fast here in Singapore, but the importance of this being a center hub for the rest of the region is. That being said, any FinTechs that are entering Singapore need to have a clear strategy in mind. Being tied into the local ecosystem is very important, and understanding how you're going to expand outside of Singapore is also important to bring in new opportunities and really to achieve your revenue goals. If Singapore by itself, for many of the FinTechs, won't cut it, it's going to be the surrounding region really where it provides the opportunity. So before we move into Q&A, just one final comment. If any of this, obviously we'll distribute the report after this, but we also Kepler Nation also does have a weekly newsletter where we cover some of these topics. Feel free to sign up. Many of you have in the sign up process. And if there's anything else that we can be of help of, happy to have a conversation around that. But the first opportunity will obviously be in the Q&A, which will start off now. So let me pass it back to Olivia to handle any of the questions that have come through from the audience.
Thank you so much, Zenon, for that overview. We did have quite a few questions, so let's start right away, and hopefully we'll be able to go through some of them. So the first question is from Adam, who asked, we didn't discuss much about blockchain or crypto. I've seen a lot of buzz about what is happening in Singapore. Can you provide a bit more insight on that?
Yeah, it's a really good point, and probably something that we should have included as potentially one of the segments here, because it is, although it does cut across multiple different areas within the FinTech industry, I think especially blockchain itself and cryptocurrency. I mean, when you look at a lot of the cryptocurrency exchanges, their headquarters in Asia is predominantly here in Singapore for many of the players. So when we look at Binance or BitMEX, a lot of them have relocated out of Hong Kong and here in Singapore. And that's developed a very strong ecosystem around cryptocurrency here in Singapore, such that a lot of the people have done very well and wealthy on the basis of this, and a lot of the new projects are coming out of Singapore as well. So there is really a crypto hub here in Singapore that's developing, and the government kind of recognizes that. We're seeing a lot more regulation around digital assets. Clearly the government, both crypto-related digital assets and then just traditional digital assets. There's been a tremendous focus from both the government as well as ecosystem players like the Singapore Exchange that's looking at putting fixed income on the blockchain as well. So that clearly, alongside of the other technologies like AI and machine learning, And data analysis is a critical element of the growth here, and it's definitely burgeoning here in Singapore.
Thank you for that. You were talking about how there was an exodus from Hong Kong, and there was a similar question about China and the fintech situation in China. So Sijia is asking, how has the crackdown on Chinese fintechs affected the expansion of these companies into Southeast Asia?
Yeah, and again, for many of the Chinese companies, Singapore was the jumping off point. So one of the most notable is Ping An. Ping An Technology is known as Ping An Technology in mainland China, and then outside of that is known as OneConnect. And so OneConnect's headquarters is here in Southeast Asia. Now, or here in Singapore rather. OneConnect is a bit of an anomaly because they've largely spun off from the Ping An mothership, and Ping An, fundamentally is a financial institution rather than a financial technology player. So they haven't experienced a lot of the crackdown that we've seen around like Ant Group and Tencent have been hit much harder in mainland China with the crackdown that we've seen over kind of the last 6 months, year around Chinese fintechs. So, largely, certainly, Ant Group and Tencent are slowing down their hiring here in Southeast Asia because they have to focus on the domestic market and ensure that everything is in place there. But we are seeing companies like OneConnect continue to grow and provide solutions into the market. The benefit that OneConnect has is it has proven solutions from the Chinese market that is able to adapt to local markets down here and expanding very rapidly in very niche segments of the market. A good example is SME lending. I mean, that's an area that not many technology providers have a really solid solution for, but based on the learnings from China, OneConnect is able to offer these solutions that are really based around alternative data that are very niche solutions for the market here. And so that's really where we've seen a lot of the traction.
Thanks, Zenon. Another one from Heather. I've heard that hiring talent is an issue right now in Singapore. Can you talk a bit about the situation, about what the situation is like on the ground and how we expect that to change or not in the future?
Yeah, and we've experienced this ourselves as a company. I mean, the competition for talent here in Singapore is very strong, and it's very heavily skewed towards Singaporeans or permanent residents, to be quite honest. It is really a employees market if you're a local employee, but it's much more challenging for foreigners. And that's appearing in a couple of different ways. I mean, first of all, the government is very focused on ensuring that Singaporeans have a job, which is completely fair and expected for a market like this. You want to ensure that your nationals and your locals are employed, and that's your primary concern. What that has manifested itself in is becoming much more difficult to get work permits for foreign employers in Singapore. That's an anecdotal statement, and that's clearly our view, not the High Commission's view. But just getting EPs approved, employment passes approved, has been more challenging over the past couple of months. And then as well, just to give you an example, I mean, we were looking to hire a foreign national who had 12 years of experience, and she was looking for the same salary that a Singaporean with 2 years of experience was asking for. So, clearly there is, and this Singaporean that we are interviewing already had a job offer at that price. So, that it does make it very challenging. Now, the upside of that is that there are markets like Vietnam where you can outsource, and there are providers here that provide that specifically as a service for fintech companies. There's a great company called Mission Plus here in Singapore that specifically facilitates software development for fintechs in Singapore through their network that they've set up across Southeast Asia. And that provides a much cheaper solution. So, fintechs or technology companies that are coming to Singapore really need to think about, how they're going to get their talent, how they're going to, and how much they're going to pay for it, because I don't see this changing anytime soon. I think with the pandemic has really impacted business across all the different segments of the market here in Singapore. But until that changes, until the broad economy starts to recover, we're not going to see many changes in terms of the tightness of the labor market here in Singapore.
I think we have time to squeeze maybe one last question. So this question is from Jane. The Singapore fintech market seems very competitive. How likely is that to change in the future?
Yeah, and that's, as we kind of hinted at during the presentation, I mean, that is one of the key challenges here. When we look across payments, wealth tech, RegTech, InsurTech, all of these segments are very competitive, and each one, you could probably name 5 players that control 90% of the market here across that. And again, that's coupled with the fact that it is a very small market as compared to other markets, at least on the consumer side. It's very challenging on the B2C side of things. Any kind of consumer-focused solution, it's very challenging to be competitive in this market. The cost of the customer acquisition cost is very high, and the long-term value of those customers is very low. Even some of the players like Grab have to heavily subsidize their value proposition to get people onto the platform. It becomes a little bit more straightforward when you're looking at B2B solutions, because there are plenty of opportunities in Singapore and around Southeast Asia for that. So really, when we look at the fintech solutions that are out there, the B2B solutions, if we were looking at the space to be in, that would really be B2B rather than B2C is really where the opportunities lie, at least in the fintech space.
Great. Thank you so much, Senan. I think, unfortunately, this is all the time that we have. So as mentioned previously, the report will be shared to you via email, and also a link to the actual webinar will be shared. And also the executive summary will be shared on the Trade Commissioner's website in time, not right yet, just yet, but in a couple of weeks it will be shared. So that concludes our session. Once again, the High Commission of Canada and CAPRIN Asia, we appreciated your time here today and hope you found this information informative and helpful. Thank you for joining us, and have a great day or evening.